Look, the bottom line is this. Americans can rest assured that our banking system is safe. Your deposits are safe.
Hey, soldiers, we got another bank that is facing insolvency. And look, even if you don't have a dime in this bank, this still has ramifications for you. We're going to get into it. We reported on this yesterday, this particular bank, First Republic, and talked to you about how First Republic had a deposit exodus, a bank run for all intents and purposes. Let's not dress it up. Let's call it what it is. And although the other metrics in their earnings report were not that bad, everybody focused in on that all-important deposit metric, rightfully so. That's the bread and butter of banking. So we got that number one yesterday, and today we saw a collapse in the stock. Now, we heard from President Biden. It's also important to note that, he said that the banking system was safe. He also said that he's running for re-election to finish the job. And a lot of Americans are asking today, Joe, what job is that you want to finish? Because as we look around the economy, we may not want you to finish the job you started, all right? But here we are. Now, guys, I need you to go ahead and enlist, become a soldier of finance. We're nearing 4,000 pretty quickly, all right? And some things are going to blossom around here. When we hit 4,000, we're going to offer some new value at that point or shortly thereafter. So go ahead and enlist. Become a soldier of finance. Let me know you did so in the comments, and I will salute you. Go ahead and subscribe. Hit the thumbs up. It's going to take you about a millisecond, best millisecond you ever spent in your life. Hit that thumbs up. Let YouTube know that this is the type of content you want to see more of out there. You want to share this. Also share it with a friend or a loved one. Let's jump right into this. Now, I'm recording this on the 25th, April 25th at about 7:43 p.m. It will be released at 11:15. I may release it earlier. Simply because when the market opens, this stock is going to do something. Okay, so I very well may release it earlier. But in any event, understand that the stock, First Republic stock, was halted several times today during the trading day. It's been on a volatile ride. The shares sink more than 40%. In fact, they ended up at almost 50%, 49% to be precise. First Republic shares lost about half their value Tuesday, a day after the bank reported first quarter results that showed a deposit hemorrhage in March that was worse than expected. And listen, again, I say, it's important for you to understand that although, you may not have money in this bank, you still are going to feel some of the effects of these bank collapses. That's we're going to explain to you how that works in just a moment. The stock shed, again, 49% to close at $8.10, a new low. Trading in First Republic shares was halted several times Tuesday afternoon after the stock tumbled. The bank was the worst performer in the S&P 500 and the most actively traded stock in the index, according to Dow Jones market data. See, I told you it was volatile. Though regional banks in general have suffered since the collapse of several small or mid-sized lenders last month, First Republic has been the focus of market anxiety following a surge in deposit outflows. The firm said Monday as it was exploring strategic options following, this is another disclosure they made, that it lost around $100 billion in deposits. And so that's a handsome ransom. But the other thing is, and we reported on this yesterday, a lot of the cash they had on hand is from loans from other banks. So that's a big pot of money. But when you subtract what the other banks have extended, banks like JP Morgan, the picture's grim. Analysts and investors question how much room for maneuvering and flexibility the firm actually has at this point. Now, the White House Chief of Staff, Jeff Zients, said in an interview Tuesday that he couldn't talk about specific banks, but he added, quote, "You can be reassured that the regulators are deeply involved in monitoring the situation and will take necessary action. Of course they will. As we've seen over the last several weeks, he goes on, deposits have stabilized, and I think we do believe that the system overall is sound and resilient. Well, he's echoing what Biden said a month ago, right? And look where we are now. And look, I'm not looking for these people to be soothsayers or be able to, exercise some, break out a crystal ball. But Biden sounded confident, okay? And now Zients sounds confident, but shoes continue to fall, right? Investors are worried about the grim math behind First Republic's operations. Also, it causes you to really consider who else is having these types of problems, right? What other banks are having these types of problems? It looks like the small fries and the regionals are having problems. The bank is paying more to borrow money, but many of the loans it made to customers carry long-term fixed interest rates, putting a continued squeeze on the bank. First Republic said Monday that while its average account size decreased, it retained 97% of client relationships from the start of the first quarter. It also announced a number of changes, including job cuts meant to right the ship. Hey, look, I don't care if you kept 97% of your clients if they had taken the money out, okay? What does that mean exactly? So you can be a client of a bank and have $100,000 on deposit one day, and then the next day you can come in, demand $90,000, and still be a client the following day with 90% less liability that, the bank is facing because they have to pay that. But now they don't have that money to lend, okay? The results put First Republic regulators and its big bank peers at loggerheads. While First Republic's basic business model is broken, the bank is determined to find some way to salvage what is left. Now, if you hold deposits in First Republic and you're reading this or you're watching this video, you probably are not inspired, okay? Let's just say that. First Republic stock is now down more than 90% since trading at $115 a share in early March. Just before the collapse of several banks sparked concerns about the broader banking industry. This is worse than other regional banks that have faced questions about their business model in recent weeks. Now, among those that have faced these questions are First Citizens Bank shares, New York Community Bank Corp, Northern Trust Corp, PacWest Bank Corp, and the one that we're talking about right now, of course, First Republic Bank. So we've got, including First Republic, we've got at least 5 more banks who are including First Republic. There are 5 banks that are facing some pretty serious headwinds. And again, if I'm reading this and I have a deposit at, let's say, Northern Trust, okay, one of the banks on the list, not inspired with confidence, I'll tell you that. PacWest Bank Corp shares have fallen 60% since early March. The bank lost about 9% in regular trading hours Tuesday. This is contagion. Then jumped 15% in after-market trading. So, First Republic was halted. But if we look at PacWest, maybe that's an indicator of what we might see First Republic do in the morning. I don't know. Okay, who knows? Nobody. I tell you what, if I did know, I would be recording this from my Gulfstream jet. So more news is coming out. We will follow this. We will follow those other banks. If you got money in a regional bank or a, one of the community banks, you might want to place a phone call. And look, I do. Okay, I bank. In fact, I have a business account with a small community bank. They're a community bank, not regional. So now that CEO sent out an email reassuring us last month, but things can change. So I'm definitely going to be sending him an email as soon as I finish this. And look, guys, you know me. I don't keep a lot of money in the bank, but I don't give a damn if I've got $10 in the bank. It's my money. I don't want to lose it, right? Listen, how can this affect you even if you don't have money in any of these banks? As we reported yesterday, this is making lending standards get tighter. So you will be facing potentially, even if you've got great credit, you could potentially be facing higher interest rates based just on the risk, okay, of lending money, You could be facing higher interest rates to finance a car, finance a home. You already know if you got good credit, you're going to be financing a home, your home, and then helping somebody else finance theirs, thanks to Biden's new rule that we did a video on. I'll link to it. But that's the danger here, is that even though you don't have money in these banks and are not directly exposed to them, this could cause contagion in lending, making it more expensive for you to get that new or pre-owned automobile, making it more expensive for you to get that house, that business loan, okay, credit card, interest rates, the whole 9 yards. So let's hope that First Republic can pull it out, because if they can't, this would be just another domino to fall with regard to the American economy and making it hard on consumers and small business owners and large business owners. Okay, we do business with large businesses. Okay, people are employed by them. So to the extent the economy is not healthy, we're looking at layoffs, okay, higher prices, tighter lending standards, none of which is going to, benefit us from the standpoint of achieving or staying on the road to financial independence. Here's that video I was telling you about. Check it out. It goes into what we reported about First Republic previously and how the banks and, the fact that they're under pressure are contributing to car dealerships going out of business, okay, by the dozen, literally. Check it out, guys. I'll talk to you soon.